What up, traders? What up, investors? Ken here from Dyslexic Investor, and we're going to be looking at Facebook, I mean Meta, and looking at some particular things on the chart, and then maybe one or two things that Mr. Zuck could do to potentially kind of soothe over investors. But let's be honest, I think things are pretty deep underwater, and it's a very large dumpster fire at this point. I'm sure everyone's read these articles, all these kind of things about earnings miss, all these huge drops, it slides, no one's using Facebook, TikTok is better than Facebook, Instagram sucks, TikTok is amazing, WhatsApp is still not monetized, and I don't know how they ever will, and why the hell are they continuously buying and investing money in the Oculus Rift and the overall VR headsets? People are like, who's buying them? They're a great product. But anyways, that without a further ado, let's go ahead and just kind of jump into the chart to kind of see on, okay, what the flippo is going on here. So again, Facebook, FB still, I still call it Facebook because the ticker symbol is FB. So Meta, that's a very, I think that was just absolutely stupid to do that. But whatever. They want to try to change. It's going to take a long time to probably recover from this. So looking at this at a weekly chart. So this is a weekly chart that goes back 3 years, okay? You have a lot of things going on here. You have the pandemic over here. You have the boom and the large bust that we're seeing here just in the last earnings report. So let me go get the old Epic pen out here, and we can kind of just like scribble scrabbling and all over this. And I think I'm going to choose the color red because that kind of basically does this particular stock justice. As you can see here, we talked about here, that's the pandemic low here, and then we had that chop going into here, and then that huge boost higher. Again, Facebook's been in the news ever since it's been literally a publicly traded company, or even before it was a publicly traded company, for whatever scandals, manipulation of market, of not even markets, of nations, like Joe Rogan's in trouble for disinformation. Like, yo, bro, let's pump the brakes. Let's kind of change the viewport on that one. But anyways, looking at the stock here, we're seeing it definitely. It's got shot. It's got blown up. It is not in a very good place, and this is something where everything is just kind of just thrown out with the kitchen sink kind of scenario, because when you start seeing these very large red candles on a weekly side, that is something that you just don't really want to deal with, because that's just everyone just fleeing to the exit and just running. And then they're leaving. They're shooting first, asking questions later kind of scenario, and they're just like, just take it. Just get it off my hands. Get it off the books. Just get it out of here. Just get it out of here. And you can see that on the volume bar. Like that volume bar is insane. Like if we go into the next chart here, I can show you the volume percentage. Okay, this is on a daily chart now. On the day of the bad news, okay, it was about, what is that? 190 million shares traded that day. Okay, on average before earnings, it was around 50-ish. So we're like 4x almost on the volume of trading, and it did cut in half from that point, but then it continued to just kind of still deteriorate. Is it a bottoming out? I don't know. I don't really want to take too much of a whack at it at that point, but this has definitely been beat down. And the one thing that I think I posted on Twitter of what Mark could do to potentially help his, doing air quotes, save maybe some stuff, is what Mr. Reed Hastings did. So if you're not familiar with Mr. Reed Hastings, the CEO at the Netflix, and he bought the dip of his stock at 388 at about, I think it was like 51,000 shares. So that's something that's he did, right? Like this is a very common thing to see with like particular CEOs or the people who are on basically it's mostly like the CEOs, and sometimes that I don't know if they made a press release about it, but it was definitely something that I think they did share. So if we go to Netflix at the same time, that thing got killed too. I'm not gonna be honest. It's gonna be, but the perspective of what's going on fundamentally between Netflix and Facebook are two different scenarios. The charts are somewhat similar because they literally have been these tech darlings. They were in the FANG group. Everyone loved them. Everyone told you to buy them. They're great. They're going to grow. They're the future. And if things do need corrections, and this is clearly happening with Netflix. We saw it somewhat to the extent of Amazon, but nowhere Amazon was nowhere severe as this because they actually did very well on their earnings on the bounce. But compared to Netflix and Facebook, where these tech giants are just getting crushed, and you're seeing again, it did report a little bit earlier, like 2 weeks prior than Facebook, and it's kind of finding somewhat of a bottom here, but I don't know how that could be potentially with the headwinds of Mr. Vladimir Putin potentially going to be creating an invasion on Wednesday or sometime after the Olympics that everyone's projecting. That could definitely scare the market, and I don't think that was. That's the one thing I want to talk about, where it's mostly I don't think that was entangled within the market. That potentially could create some ongoing issues for the overall chop, and not just the Fed giving us the big old in the rear end, but this is definitely something that could definitely take down the overall market. So on that standpoint, we can kind of look at the Facebook. Looking at this, I kind of just want to do some very basic Fibonacci extensions here. So on the previous high to low to the high, I had initially some support at 243. It cut right past that, did not give a rat's ass about that, and continued going down. So this is definitely in la la land. We're not quite sure on where this could potentially rebound at. Like, if there's not too many Fibonacci sequences that I ran that we saw any kind of significant support, because again, this has just been completely taken off course. It needs to kind of calm down. It needs to hydrate again and get back into fighting shape before we can even really look at it. Because again, it's the wounds are recent. It's still bleeding. It's trying to recover. That's why it needs to rest and kind of get that kind of a formation where it potentially builds fairly tight over like a consistent like 5 to 7 week period. So on that standpoint, I really want this with a 10-foot pole with all the other issues going on. Like, there's so many other better things to invest your money in. That is my opinion. I'm not a financial advisor, so do your own homework. Okay? Don't just listen to some random person on the YouTube and literally throw thousands of dollars at it. Like, let's have some more common sense about that. All right, so let's go ahead and jump into the overall markets. Again, looking at the weekly side, we can kind of just jump to the daily side to give a better perspective here on what I mean by chop. If you're in the Discord, we're talking about chop every single day of just like going up, going down, going up, going down. Very like a seesaw kind of scenario of like, oh, we're breaking out to a bull market. Nix. Oh, we're breaking out again. Nope. We're breaking out again. F you. And nope, it's not happening. So basically, that's just basically a breaking of a trend. And I want to go back to the weekly side, which I want to note too, is this is the first time right here. You see that? The purple line, which is the 8 EMA, is crossing through the 34 EMA, okay? When have we ever seen that happen over the past 3 years? I'll give you some time. Okay, done. It happened right here with the downflint of COVID, okay? So this is something that really took us lower. It was, I wouldn't say it was the bottom, but it was we definitely broke further through, because what we're looking at here. So if we're, okay, I'm not comparing the pandemic to Russia invasion of Ukraine and the Fed rate hikes, but these are all things that are going on in the world, and the overall economy, the overall people investing in the market are going to be reacting to things differently. Like, people have different tolerance for things. The psychological wear and tear of losing money week after week and seeing things go up and down. Some people just throw in the towel and say, F it, I'm done with it. But we're coming into some very interesting prices where things could steadily kind of go chop, or we really could go potentially on a very downward slope. And that's what I kind of want to highlight here. So if I erase this guy here, and we can zoom into again that breakdown of the COVID here, where we saw this crossover here, where it was again, this is a weekly candles, and this is where it kind of came across. But if you remember, we were how many degrees? We were 16% from the 200 EMA. So at this time when we hit the 200 EMA, we are 13 or 14%. So we were elevated 16% of the time. So we're basically standing as like, hey, we were further away from the 200 EMA and we just fell drastically. We've kind of been chopping for a little bit and then slowly coming, not I want to say slowly, it's still pretty severe here, coming into the QQQs here. So looking at those standpoints there, looking at that 200 or the 55 EMA here, which is the 3 dotted lines, and then the green one is the 144 EMA. Okay, so the one standpoints that I always go for is the 34 and the 21 EMA on every chart, basically between the weekly and the daily, which I usually always look at, and maybe the 4 hour. The 21 and 34 is something that I want to be giving a lot of trend following status to, and always kind of reverting back to that. Because again, when people say, oh, buying the dip worked in 2020 and 2021, yeah, because look, 21 EMA, 21 EMA, 21 EMA, 21 EMA, and 21 EMA. It worked about 5 times. That's I can't write 5. Okay, 5 times. Okay, and it basically worked every single time. But guess what? The 6th time, it no workies. I need helpsies. I need upsies. The markets, some people are asking for. So potentially, where could we go? Like, could we go down to 300 and the QQQs? Maybe. I think anything can happen in the market. So look at me. I'm gonna clean look my eyes. Anything can happen in the market. All right. It doesn't have to follow any kind of rules or anything around that sense. Anything can happen in the market, and you have to be ready for it. Markets just don't continuously going up. Markets don't continuously go down. It's an ebb and flow kind of scenario. So just get ready for anything. And I think potentially we'll see a lot of chop and definitely some disruption, especially with some of the world events that could be going on outside of the Fed. Just got a cup of tea of that. Like, people are like, why the F would Netflix stock go down or Apple stock go down because Russia and Ukraine are having some issues? Well, it's in the world magnitude of things. It's in the spotlight. It creates fear, right? Remember fear? The VIX goes higher, the fear gauge, people get scared, the higher inflation, they're like, what could happen? They're going to invade us. Fear is a human emotion that is just the weirdest one, because you can literally do the dumbest things when you're fearful. Like, you can be fearful of doing something, and you're just, and you're, oh, let me just buy the dip because the fear worked all the time before, or the fear of this happening, but the circumstances have changed. Like, if you put yourself in the active acknowledgement or the power of fear, I think that can really ruin a lot of people's trading and investing. And it's not, I'm not saying investing is not all butterflies and rainbows. You should be optimistic. You should be realistic. That's the biggest scenario in that sense. And just looking for the tide has changed, and things have been slightly changed with the momentum. The world events have kind of created a market where potentially could be seeing some more chop or even lower lows in the next coming months. And it's an election year. There's just so many things that potentially could stack up, but being optimistic at the same time of like, hey, things go in ebbs and flows, right? Like, things correct, they can come back, right? So just kind of keep your perspective on that, potentially what your time horizon is, and just be careful out there and trade smart and think before you just continue just to buy the dip, and be careful out there. All right, folks, this is Ken from the Dyslexic Investor. I'll catch you guys on the flip side. Peace.